investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. On this Monday, the 12th of December, we're looking at the Dow up 182 at 33,657. It's really important that the Dow over the next couple of days attempts to get to the 33,900s, even touch the 34,000s, because at this particular point, the sideways trading band that we're looking at, the little mini one right here, has this pattern that I call the H pattern. Now, all these patterns that I'm talking about today are what we will be studying in great detail this is on Thursday when I do my live trading webinar. We're always looking at straight line up, straight line down, cup formation, arch formation, a mix of these three. If it's the H pattern, red, because if it goes down and then fails at a peak A or a B and takes out that left side low, it can get quite a bit lower. But on the right side, that reverse Y, green, because if it takes out the left side high as it makes a cup or a V-shaped pattern and takes it out, that can be much. Look, there it is, the cup formation on the positive side. And now we're making the arch formation. There are a couple of arch formations right. There's an arch formation. There was another one. There was another one. So these are very important, just three key patterns. But I wanted to add one, and I did that. I always talk about this, and periodically I discuss it. There's a long, narrow rectangle, which has a whole bunch of connotations, and a large rectangle. So within that context, let me show you a couple of things. I want to get to this right now before I forget, because for 2 days, I did not see until over the weekend a message from Mike. He wanted to know about Devon Energy. When could he get back in? He's had good gains, I believe, and now he wants to get back in. So let me show you something. Devon Energy made a peak C1, C2. This is a technique that I'll be discussing in my webinar when it doesn't go to a D, but just fails by a fraction, but everything else is that it really acts like a D. So treat it like a D, meaning be careful because then you can get cheapest pullback. Now it's dived from the 78 area, double top, 79.40 back in, I think it was May or June, plunges down to the 50 level, and then goes right back. Peak, A peak, B peak, C, but fails at 78.82, 60 cents below the previous high from months ago. Double tops comes down. Now you can see there's a trend line. If I drew it in, we're under that. So that's really important. And it's a peak arch formation, that H pattern right here. So I'm thinking that I'm talking about this for quite a while now, for actually over a month. I've been saying I believe the crude oil's topping out, but I don't know yet whether or not it's in the daily chart and probably the weekly charts that I'm looking at. But monthly charts, I have to wait for December to make any decision there. Well, Devon Energy, I would hold off adding, and I'll show you why. Look, Exxon was the leader in the field, multinational, different sector within the overall oil sector. And look what happened. It was here back in the 110, 112 area, and I said, I'm beginning to see an overbought situation in the unbalanced volume, one of the techniques we are talking about on Thursday, and we're trading using this particular technique. And I said, it's a problem here because I can see some upside, but I'm beginning to see an oversold condition that's going to take Exxon, and at best, it'll go sideways with limited upside. But at worst, if it takes out key support the 107-ish level, I'd be kind of nervous, at least in the daily, weekly charts, that there's some kind of a top form. Well, lo and behold, it hit that 114 level, 114.66 on the 9th of November, and then out of about 12 sessions, 6 or 7 of them went right to 114 and then pulled back. And then what's the rule of the rectangle? Because that rectangle formation I'm talking about, if it takes out the halfway marker, it can test and probably take out the left side low. That's at 107 area. So ExxonMobil went all the way down. Exxon symbol is up $1.70 today, 105.24. but the doji candle low hitting the Chapman wave inside wedge target support level 4 sessions ago. Yes, it did hold, but I still have a target of about 100. Of 99 to 98 by Thursday. It's getting a little. I don't know if it'll do that, but that's the way I'm looking at it. So, within that sector, if you had to look at Devon Energy, it's at a much larger rectangle, and it's forming the cup formation, which we did at PC. Now it's forming the arch. Remember, I'm always talking about sine waves. There's the ellipsoid. Okay, let's just look at it. Moving to the upside or the downside, and it's stuck. And if you look at the monthly chart, it's the same thing. I'd hold off. I think that the energy sector, now I must include the XLE right now. The XLE it's done the same thing. It looks a little bit like Exxon right now. And it did like Exxon, the doji candle in November. This case, S&P Select Energy Spider Fund XL trading for $1.62 at 84.28 after a very ugly candle, actually almost a Chapman wave Roman candle, upside down candle, Friday. 93.31 was the high in. Oh, wait a minute, did I do that? Oh, that's right, in June, right there, June, and 94.71. Was the high in the 14, 94.71. Just type that in, takes 2 seconds. 0.71, 11, did I say 4? Yeah. No, 20. I'll make the change it later on. Yes, so look at this. We're looking at doji candle on the 14th, not the 24th, but the 14th. And now it's 94, it's down to 84. Big deal, so it's down 10 points. Is a big deal because you've got the arch formation, this dreaded H pattern right there. When it took it out, you've got a 1-to-1 to the downside. If this starts to trade at 82.50 to 81.90, the 78.58 level, 203 exponential moving average will become a target over the coming couple of weeks. Now, I call this a C because we had an inside A, B, C, D, and that completed the buy mode. The high that was made at 93.31. Yeah, 93.31 the 10th of June. When it pulled back, it went underneath the starting point. So I suppose I could call this D, E, F, G, and then this would be, there's no H. So either way I'm looking at it, I have to keep pointing at a peak C. And if at any point in the next month or two it takes out 65.48, it negates everything about that buy mode. It fails at peak C, which is really unusual. But it's peak F in the monthly chart. So they all do the same thing, except there's a little bit more strength just at this moment in the XLE than in let's go to the OIH. OIH, you see how it's pulled back? And there I have the alternate count, and I have a legitimate count of E/C, the 1, 2, this is the, look at this beautiful measured move to the upside. It got there exactly the day of the week of bar that matches the time, that's bar symmetry, and pulling back, and a doji candle at the F. I have to tell you, I'm now a little bit more cautious than I was before about the whole oil energy sector. I'll be back. Basil, Chapman.
The TFNN Holiday Tiger Dollar Sale is running this week only. We've doubled our normal bonuses where you can now get up to a 40% bonus on your purchase, and all purchases also receive a TFNN Tiger Mug. Tiger Dollars are good for all TFNN newsletters, trading webinars, and services, so they're a great way to lock in added savings. Don't miss the TFNN Holiday Tiger Dollar Sale, which ends this Monday, December 12th. For all the details, visit the front page of TFNN.com today.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Sign up for Basil's live webinar, airing this Thursday, December 15th. Basil Chapman will be hosting his first ever live trading webinar, just in time for the holiday season. While Basil will focus on the S&P E-mini futures, other symbols from gold, crude oil to natural gas and more will be traded as appropriate. Basil will demonstrate specific Chapman wave techniques, as well as answer questions live. Spots are limited, and Basil goes live Thursday, December 15th. You don't want to miss it. To sign up, visit the front page of TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So the S&P E-minis, this is already the March 2023. We're in 23 already. It's gave a peak E-top at the right here at about 10 o'clock. And it's pulled back some. It's good to see that the market is attempting around here, but this arching over is just, I cannot dismiss it. I said subscribe. We've raised cash. We cannot dismiss these arch formations because they can be quite potent, especially the double tops in the cup formation that test within pennies sometimes. 317 round number high. That was a round number high. June the 10th, the week of the 10th of the week of the 10th of June, 22, and 370.00. It just bounced. It's almost the same pattern we were looking at the E-mini, and then it bounced up to 317. That was the day before, and then it bumped up to 322.79. 79. So isn't it interesting? You've got within, a couple of dollars of the previous high after going from 317 down to 195 to almost double bottom with 3 points difference. And now you've got those 3 points are made up on the upside, so the measured move. It's just fascinating, right? So what we're looking at, I wanted to check something else. It makes 329.31 the 11th of November. 329.79. So there's your 2-bar reversal. In this case, it's fractionally on the upside. Got to be a little careful there. And we went under the 9-period moving average and then under the 14-period moving average on Friday at the close. And now we're a little bit above it. I'm watching these things very closely because you know from everything you read that this whole talk about inflation. And believe me, once inflation's out the bottle, it's at the genie out of the whatever it is. It's very hard to get back in. But at the same time, look at this. Wheat. That's wheat. Oh, I meant to talk about this the other day when I did Larry's show. I did not show, but I did his hour on Friday. I had this all ready, and then I forgot to use it. There's a technique that I discussed some time ago. I think back in it's more than a year ago. I said, there's a chance. I'm typing this in, but I have no idea if it's going to work. This is called the Chapman wave unconventional flat-based restart, and it should be going back to 820s. And I typed that in. I'm pretty sure it was before, but I'm going to say I'll go afterwards. Maybe it was in the 900 area. And I said, however the upside becomes, and even if it goes over the 200-period moving average, this particular technique took a long time. Oh, I remember now. It was just after it made the low, right there below that after the peak D was made. I said, this is the target. The particular technique I discovered and started using decades ago. And it doesn't happen all that often. But when it happens, it is just amazing because every time that the price rallies, it keeps coming back down to this whole zone of the 860 area. And that just says there's a chance that at some point over the coming months, coming weeks, maybe months, we'll be coming right back and going under it. Well, that's exactly what happened. We did go to a peak D once, and then there was this counter's Chapman instant restart called an unprofessional because it kept coming down below the Dow, the D peak D low after that. And went to another peak D. Now we're trading down to 744. So this is, you're getting close to some kind of a balance. But if you take out the left side loan that's in symmetry, the bar symmetry, which you've done, just missed getting there, but 2 weeks later you got there, get out. Sweet, that's sweet. Continuous contract. You can chop around, and at some point you will have a decent rally. But in the meantime, it could be very choppy. Look, soybeans has been making peak A. Peak B does the same thing. You've got a left side, right side price time match that says maybe late December, early January, we should be testing the high that was made back in the 13th of September. The continuous contract high was 1520. We're trading at 1463. It's kind of struggling over here, but that monthly chart has made a C, and it should go to a D. But look at corn. Corn has gone all the way from a peak D. It took a little extra time in that left side, right side price time match. I'll be discussing bar symmetry, and we'll deal with it live on my show, live show on Thursday. It came right to the 200-period moving average. Earlier in over a year ago, in June, July, August, kept treating that 200-period moving average as a magnet and then a propellant zone. All of a sudden, it's come back to it at 659. That's the continuous contract, the 200-period moving average, 649 right. So what I need to do is to show you that this one has the same thing. So the whole commodity area has been consolidating for a little while. Consolidating doesn't mean to say that it's in a major sell mode. It says it's taking its time, huge moves to the upside. So I'm watching this, and I'm going to see whether sugar is the other one. SB. I didn't type that wrong place. Just put it in here. Okay. There it is. Made a peak D. A perfect left side, right side bar symmetry. Look at this on the daily chart from the high that it's made. These numbers will change if this continuous contract gets smoothed out. Nothing else changes. So in this case, I've typed in 20.45, but now it's a 20 round number high. Let me double check that. 19.9. How can that be? It's 20. So right there, that was that back in April the 12th. Comes all the way down to the 16th of the doji candle. Starts to move to the upside. I chose that as an exact tangible midpoint, the plumb line, with the same number of bars. This is what I'm going to be discussing on Thursday. All these things, I mean, it happens over and over. And there it goes to a P right there, doji candle on the 16th of November at 20.48, slightly higher, but a perfect to the day from April, I mean, to November, going down sharp and coming back. So this is a technique that I really enjoy using. I use it in the short term, use it in the near term, long term, and it happens often, works often enough for me to say this is really a viable technique to at least demonstrate and to show how it works. And let me go to the EHR. So I made a PE. There I had drawn in left side, right side price bar symmetry. I had to choose a particular candle because I thought if it went to that PT, that would just be too far. So I like to be a little conservative. I choose a particular bar. So there are rules, even though the rule is that you want the midpoint to be at the low or the high of the cup or of a cup or an arc. But sometimes I just says, no, it's not going to work. All right, that's what we've got. There's a rally attempted here, 11 up, mini. The Dow is up 186. We'll be right back. Basil, Chapman, Tiger, Traditions off, and I'll try to work on a little bit. I don't see it well.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Folks, we're back and we're looking at, we did the sugar, so now we do a couple of things here. The TLT. Look at this. This is really fascinating for me. Within the context, maybe I'm going to go to the TBT. This is the inverse. Yeah. Within the context of those techniques that I like to use, look how the TBT, which is meaning that the yields are going down. Look what happened. We hit the 200 period exponential moving average. And that 200 period exponential moving average at 27.74 had a little bounce on Friday, holding okay today. It's down 33 cents at 28.38. But this is where you would expect to see. Let's have a look at the TNX, which is the TNX.X, which is the 10-year yield. TNX is the 10-year yield. And we're looking at T-note, that is. And what we're looking at is way above the 3143 200-period exponential moving average. Let's look at the TY. TY is the 30. Oh, I haven't even updated this for a little while. Is the 30-year yield, 30-year T bond. And it's going to peak A, peak B, C, D, E, and an F, and it's sort of stalling, but the 9-period is over the 14. And that's just saying that there is a rally in the 30-year T bond. And let me show you this. I'm going to go to it because for my subscribers, I did an hour overview video on Saturday. I always over the weekend do a video, and that video, I forgot. I always do every year for every week for decades. I show the triple yield charts. That's the 30-year T-note. This is the 10-year, T-bond, the 10-year T-note, 5-year T-note. And look what happened. You had a cup formation, and then not one of my favorite patterns, because a cup and handle invariably, even if it rallies strongly, it comes back into the handle. Look at the sine wave here. Cup formation, arch formation. Does it continue to do this in a smaller way? I think so. But look at wood, the iShares of the global timber forestry. What a nice rally above the 200-period moving average for the past 6 weeks. It's been above the 200-period moving average. But then so has the HGX, the Philadelphia Housing Index, done very nicely. So it's just fascinating for me to read, whether it's the Wall Street Journal, whether it's news, even where was it? I was listening to something, a news yesterday, national news. Well, they say national, but it's usually kind of, the news is just pathetic these days. There are no reporters anymore. They're just repeaters of echoes. And that makes me very upset. I don't care what they're saying. I just want them to dig. And very few dig anymore. They just repeat what they heard somewhere else. So this reporter says, she says, out of the blue, she starts talking about Tesla. This is the news. There was no real news there at all. So this is like business news, but this is national news. It was CBS or one of those. And she starts talking about Tesla, but she talks about Elon Musk, but not about anything other than that Tesla's going down. People are going to be very upset, and there are a lot of people in Tesla, but then there's a lot of competition. So talking about the competition out of the blue. Well, then, wait a minute, that's not news. Anyway, back to my story here. Within the context of all that's going on, and what I really wanted to say is the negative news that I read all the time. I mean, if you speak to anyone who's in the what they call financial wealth or wealth advisors, most of them are just totally confused. And they said you're going to have some cash, and there's some say maybe start nibbling. They don't know where to nibble. Then they talk about dividend stocks. Dividend stocks have also pulled back really sharply this year, and they are totally confused. I am just impressed that even when I look at the charts and I say, wait a minute, let's get out of this. Let's go to just our basic charts, because I wanted to show you what for me is really important at this particular stage. We have not had any short position for just a little while, because we were short until that big turn to the upside. And we did have the SPXS, which is 3 times short. And I said, I'm putting it on my Traders Corner list. We're not doing anything yesterday. We're still long. We're still 3 times long. In fact, the Dow, we've added, I had said about 3 weeks ago, I'm now, before I was trying to keep to stocks that were in the lower double digits, maybe even single digits. I said about 3 weeks ago, no. Now I'm prepared to go into stocks that are, it doesn't matter what the price is. If we like the stocks, it's going to be really important, because if they are doing what they need to do, and if it's positive, despite what's going on in the market, you've got to respect that. And I think that's the stage that we're at. Stock selection is absolutely imperative. For instance, today we chose a $3 something stock, between $3 and $4 stock. But I said this is a screamer. Screamers I talk about are under $10. They have a chance that if you get them just exactly right, within minutes sometimes they can have a 3 to 6% gain. You got to raise your stop, take something off, try to raise your core position. So it's almost like a break-even trade. And if it holds well, you can hold it for longer. But that's it. Well, I said today's stock, you've got to get before 10:20 Eastern time. So less than an hour into the day, that's when we want to get it. Well, it turns out that it actually spiked a little higher, and then it pulled back, and now it is trading where we wanted it. I don't want it now, and the reason is, if the market starts to weaken later on, we don't know, that one might become vulnerable to some selling. I wanted it to, first of all, sell off, then build strength to the upside, allow us maybe to take something off. So that's what we have in my Trader's Corner. Every once in a while, we have these stocks. Doesn't always work out, but we try. Within that context, we also have triple-digit stocks, and they are in sectors that one is where fund managers might start to say, hey, the oil sector, that's the Exxon, CVX, Chevron, even we were looking at a moment ago, the Devon Energy, they are giving very nice dividends. But if they start pulling back, if you're buying them now, you lose capital gain that will be worse than any dividend you could ever get. I don't want capital gain loss. I don't care what the dividend. I know there are some people that have survived years and years and years of having a stock like an Exxon or a Merck or something like that, which has had huge volatility, the upside and the downside. They don't care. They've just got the dividend. They love the stock. I just can't, not for subscribers, I just can't do that. So in that sense, we're going for a sector that has a lot of competition, very selective, but Friday showed a little bit of strength. And that said to me, maybe this is a sector, if we can keep holding this particular stock. Actually, we got the ETF just to have, I wanted to be generic rather than specific at this particular point. And I said, if it can hold through the next week or so to show that it's got the strength that says fund managers are actually starting to look at other areas that have good dividends and maybe now have capital gain appreciation, this could be a sector. So it's experimental to this in the sense that this is still a really choppy market. Remember, we spoke a month ago, I said, I'm anticipating a sideways move to maybe lower highs and lower lows kind of market. Look at this. I'll go back again. Look at the S&P. Talk about a rectangle. Look at this big rectangle. It's just been stuck in the rectangle for over a month, about a month. Yeah, it's actually a little bit over a month. Look at the QQQ, same thing. I'll be back in a moment. Dow's up 168.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks, we're back. Yeah, so I just wanted to clarify because a couple of people mentioned something. When I was talking about Musk, I was talking about the comments that were made. There were comments. They weren't. It was brought up just like it was out of the blue, and I always say, well, what's the reason for that? That was already it. I wanted to mention that. I like digging. I like report. I don't care whether I agree or disagree. I want to hear a real in-depth story. And this was really kind of pathetic. I thought, why are they doing that anyway? So within the context, so Paul says the VIX is up 7%. Watch out. Look, the VIX gapped up sharply. The Dow is up 193. The S&P is up 9, and the volatility. So this is saying to me that fund managers, after this whole weekend, are looking at the volatility as insurance that enough they think is out there that can go wrong, because why else would you be buying volatility like this? And the fact that it's up 7.75%, up $1.75 at 24.6. You remember last week I was saying if it gets to 23, I think I said 20, I'm trying to recall. I think I said 22.70 to 23.30. That's going to say the market, especially if it's down, could go quite a bit lower. But here it is. There's a contradiction. They're going in the same direction. And that just says to me somebody's either going to be wrong, or there's a buildup now of insurance which says over the next few weeks expect quite a bit of even more volatility. That's more or less what I'm looking at. Now, I'm going to explain a couple of things. I don't have much time because I want to do this before the 11 o'clock hour comes along. And so the VIX index, I said last week, there's a rising trend line in the weekly chart. Chapman Wave Inside Track, I'm going to be talking about that and demonstrating it live and hopefully using it for good purpose on Thursday in my webinar. Please, folks, I have so many techniques, but I'm going to just drill. I don't want to overwhelm, but as something shows up, I'll talk about the technique that applies to it. And I will spend a lot of time on the 200-period moving average. Look how the VIX index broke under the 200-period moving average, and now it's getting closer and closer, and that is at 26.09. So if it goes even just, what's the high today, 26.64. If it goes to 20, is that 25 or 26? I just want to make sure I'm telling you the right thing. 25.09. So it's getting close enough to say, hey, it could even touch that line. And if it touches that line, it will start to impact the market's upside. And I said 33,600s, I suspect is going to be strong resistance today to subscribe to my opening call. And all I'm saying is this up channel, inside track, I called it propellant zone. If it starts to move higher, repellent zone, if it goes much lower, is going to be absolutely imperative because we're in the area. I said, this is where you can start to expect some kind of a bounce. Well, from 1895 to 2458, I would call that a bounce. It looks like the UNG we'll get to in a moment. So in the meantime, This is, look, there's the price. You can't see it because it's kind of covered up, but it's on the black 14-period moving average. The pink is still way underneath the 14. They give us a lot of room to go. But in the meantime, the reason why I didn't want to change anything in our Dow positions and then buy the insurance, which in a way would have negated, although we've taken profits off our 3 times long, it would have negated some of that, which is exactly what I would want. I want to be emphasizing we're now more negative on the shorter term, but I don't want to change our bigger positions. But we haven't done anything. Why? Because I went through so many stocks that are, when you get to D, E, and F, peak D, E, and F in the Chapman methodology, you can expect some kind of a pullback. But if it only holds sideways, you remember I was saying that the Exxon chart was going sideways, but it looked more like distribution because the technicals were starting to fail. But if the technicals are holding well, as they are, look at this. Let me go to this EINDU, so you know what I'm talking about. When the technicals are holding well, and that's the 9 period over the 14, I've got to respect that there's still some internal strength. But in the S&P, when you start to see today it crosses negative, I've got to look at that and say, hey, the MACD is negative, the 9 is under the 14, the stochastic is only at 17%, the on-balance volume is struggling at the bottom. Oh, wait a minute. The stochastic's at the bottom, that's usually a good sign. I'm sorry, the on-balance volume, if it's at the top, you get a look over there, you get a little nervous because it can give you a good heads-up signal to say, hey, be careful. But this is at the bottom, and that says to me there's a chance that there's limited downside at this particular point as the S&P builds up enough strength to, at some point, fairly soon attempt a big move above 40.20 to get above the 200-period exponential moving average. So I go one step at a time, but I don't see anything yet that says, smash to the downside. I do see downside activity, but that's okay. After a big move like that, I want to see some digestive action. Let's go to Sava. Sava is Cassava Sciences Biotech. They're working on Alzheimer's, many others, but I've got Alzheimer's here. I've got the chart saying Alzheimer's. I'm sorry, not yet. So far, we've avoided it. What we're looking at is this is a peak A right here in the daily chart, gray A because it's under the previous high, B minus, and the stochastic is still negative, and the MACD is not yet positive. And then finally, the MACD just flips a little bit positive, and it goes to a B. Friday, it goes to leg C. Today, still in leg C. And the stochastic's at 78%. So I can, although it's always difficult with a biotech stock, I can say this is in a buy mode. It should go to at least a D. So within that context, in a biotech stock, when you look at charts, I can look at charts and say, gee, this looks like a biotech stock. What does that mean? It means it has nothing, and then a single move up to the upside just breaks out, and that can continue maybe for just a little longer, and then it gives it all back. But if it makes higher highs and higher lows, it says, be careful. Look at the rhythm of those big spikes, because sometimes they work. Years ago, I used to look at them and say, it looks like they're paying their workers, the employees, they're paying them with options. So that every time the options pop up, they say, okay, get out as much as you can. That'll be your wages for the month. And then the thing just dissipates, goes down. In a way, look what's happened to the 200-period moving. Look how important this 200-period moving average is. And I'm going to discuss this a lot coming this Thursday. What is the importance? Why is it important? Why do I make a big deal about it? Because it makes a big deal about it. I'm just repeating to you what I see visually. In other words, I'm trying to do the reporting by being as constructive as possible. And here it is pushing away. And the 9 period is over the 14. Stochastics at 78%. I prefer over 80%. On balance, volume is quite good. MACD is trying to turn up. So it has the capacity to go to a peak C, pull back, then another bar, goes to a leg, or very soon afterwards goes to a D. But the high that was made over here at 44.28 on the 14th, with a 2-bar downside reversal, 43.12 was the next high, says to me that it is more in a rectangle formation rather than this big bowl formation right here. And being a biotech, news is absolutely imperative. But this thing skyrockets when the news is good, and then it just pulls back a big percentage, but it does it in a very time-consuming way. It takes on getting ready for the next big move up. So I would say 37.50 is key support.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back and the Dow is up 197, S&P's up 9. So this is the pattern we're looking at in Chapman Wave methodology. You're always looking for peak Ds. There's your peak D. There goes D, quick E. Here's another D. And then you expect something else could happen. That's the analysis that you need to do. So I was asked about UNG. I've been talking about UNG for about a week now. A little embarrassed to say that it started making the low that I was anticipating. And I never said to subscribers, all right, let's just start a position. You can start a small position, but have a tight stop. I kept delaying doing that. And every day it just moved higher, and today it gapped up. So right in the 1750 area was where we wanted to get it. I'm not sure even, sometimes it's the psychology of the whole thing you got to analyze. And we did not get in. And here it is at 20.66. It looks great. I think that the gap up today, the gap up got filled on Friday, but it still closed quite nicely. And then it's gapped up again. I think it's very close to some kind of a pullback. But the 2236 200 period exponential moving average, I think that can be a target now. And what I was talking about, and maybe I got too involved in the whole thing, was that the move down for those people saying, I've got to get out, and every day they'd wait, and then a gap down, then they got out. Now they're looking back and say, oh my God, if I just held it, why did I get out? I'd actually be up right now, they say. Anyway, it's better to be out of it shaking your head and saying, wow, I should be in, than being in and saying I should be out. So in the meantime, back at the ranch is holding very well. This is natural gas, UNG. This is the United States Natural Gas Fund. So, folks, the sale ends today. The Tiger Financial said it's a fantastic sale. You can get my webinar on Thursday. It's a trading webinar, 5.5 hours. But I will not just put the positions on. I'm going to be discussing all the different patterns. I've got a prepared. It's like a full webinar that's prepared. I will get to all those different things. I'll be discussing the forms of 200 moving average, the bar symmetry, expecting a peak D. Just all these things that we talk about all the time. Stay tuned for Steve Rhodes and some great programming coming up. I'll be doing